Hey guys, welcome to Dream Coin, where we show how to invest for a better tomorrow. My name's Tyler, and today we're going to be doing some updates on Marin Software, where I think their stock is going to be going into the future and how everything has played out over the last week since I last did my live stream on them and the stock was being given a shelf offering from the company. So getting right into it, we had a shelf offering that came out right after they announced a preliminary second quarter financial result report Thursday, July 15th. And as we look at the earnings, they actually look pretty solid for the company, especially coming off of COVID as a digital company and everything, presumably attempting to open back up and everything. And the revenues weren't down too much from where they were as of second quarter of 2020, where they went from 7.3 million to a estimate of 6.1 million. And their GAAP loss actually was lowered from 4.5 million down to an estimated 3 to 3.3 million. Their non-GAAP loss was actually still down from what was expected as compared to the second quarter of 2020 as well, where that went from 3.6 million to an estimate as high as 3.1 million. And their cash equivalents and different things like that as of June 30th add up to be about 14.5 million for them right now. Obviously, with possibly declining revenues and everything, there's an issue where they might need money going into the future until their Instacart stuff ramps up and they possibly get that Google deal that we had previously discussed renewed, so they have that income inside of their balance sheet as well, which leads us into where they did their shelf offering. And the shelf offering that they allowed for has a potential to go up to $40 million in revenue, and I think that they probably raised that when they were doing the offering, since they announced it at the beginning of the day during pre-market, right before market opened on Thursday. They actually came up to where this started pulling the stock down, presumably because the announcement had not only gotten a lot of shorts that we saw pile in right before then, but they slowly looked like they were diluting the stock both Thursday and Friday as the price was consistently getting pulled down since they announced that. I'm going to presume that we saw the last of the shares being added into the float for the market due to the fact that after Thursday and Friday and the steady decline, today on Monday, we saw in a very, very red market where everything was just down huge. They were green for a decent part of the day where they were running and actually were able to reclaim 9 for a little bit. And then they settled back down to where they were just under $9 towards the end of the day. So it did show pretty well for where they were sitting for the majority of the day, with the rest of the market being down pretty bad. And it shows that they would have been pulled back a lot harder, I feel like, if they were still issuing shares into the float from where they had announced their offering. What also feeds into my theory that they have finalized issuing those shares and they collected what they needed in cash from that offering was that they announced the date of their second quarter financial results conference call is going to be June 30th, which is the end of this month. So we're about a week and a half away at this point. And it's going to be assumed that they have good information to share as compared to their preliminary estimates, just looking at the fact that normally you don't try to move your earnings up earlier than usual. Right now is projected to be in August before they announce this. So this looks great for where they want to issue some news, possibly to investors, about where they see the company going forward. And we're most likely going to get reference of the cash that they now have on hand from that offering, because with their current cash on hand being roughly 14.5 million, with that $40 million, that puts them over $50 million on hand for cash. And since their cash burn is so low, even if they somehow out of nowhere just had no revenue, they would basically be set for the next 2 to 4 years with the amount that they have on hand for their operating costs. And so they are in a good spot for where they are long term, and I've already viewed them very high fundamentally, where my price target for them is going to be $45 to $60 over the next couple of years. As we look at the price action here on the 15th, they look like they were going to be trending in the middle of $13 and $14 and possibly reclaiming the support before that offering and everything else went through. And so after the offering, they had a pretty steady decline throughout the day from the 15th to the 16th, and then the 16th through into today. They consolidated pretty well here around this $8 area. More specifically, we're looking at around $8.18 to $8.20, and this was kind of more of a bottom area. A lot of people have assumed that they would settle. I thought they would be between like $8 and $8.30, for example, for after this offering and everything. And right now, what we could be seeing is if they were to somehow go lower. I'm seeing a gap down to about $7 where the previous resistance and everything was. What we saw also during the day was that when it did have its sharp drop to basically initiate where they would be on SSR, once that hit, they were pulled back and they ended up hitting over $9 at one point, to where this basically just settled for the rest of the day after that. Avante Investing actually did a wave setup on the MRIN chart, and what they presume is that they could possibly be going into a wave 3 extension that could put them up to $28 as a high, and they were stating that the support should be strong above 7, which I agree with on the support part. As for the high, I'm not entirely sure that we could reach that as of now until we see some decent action that would actually get them at least supporting $10 to $12 at a bare minimum. What I'm also going to be concerned about is the fact that I have been hypothesizing the market could be going into a deep correction within the next couple weeks, and this would have us looking at a similar market condition as compared to March. Obviously, if that happens, it's not going to be great for stocks like this that are already getting beat up a little bit right now after they ran to stupid high new levels as compared to their previous trading periods. As we look at Ortex, their free float percentage has been somewhere around 18 to 20% for short interest, and their cost to borrow is estimated to be about 200% as of now. And it's been assumed, as we've been looking at the stock, that a lot of the old shorts have probably covered at this point, but there's been a lot of new shorts that have been cycling in and out to try to drive the price down. What we're going to be looking at on the stock for this week that could also still be bullish for some of the price action is the fact that they have been on the failed to deliver list. Obviously, that doesn't really mean as much as what it could have been with leading into options and everything before options all got expired on Friday with the unfortunate timing of the share offering. But what we could be seeing with the FTDs is that they could possibly be getting margin called depending on who's loaning out to people and if they want to deal with that anymore. It would just kind of provide for a possible catalyst going into this. I like to get my information from a few sources. So as according to Fintel right now, they've got about 80,000 shares available to borrow, and it's been fluctuating a lot through the day, which can kind of tell you a lot of those shorts are cycling in and out. And their short borrow fee is now officially under 100%, which isn't great if you were banking on short borrow fees enticing people to pay back their stuff sooner. As compared to the 15th and 16th, however, with the share offering potentially being injected into the market, the short interest has jumped up a decent amount for the volume ratio. As compared to the 15th and 16th, where the share offering stuff was initiated, it has appeared that the short volume ratio has increased since then, so that does look good in that case. And now we're going to be hypothesizing where this price action could go leading into the next couple weeks. So for me right now, it's going to be a huge counterpoint to whether they can regain the $10 area. I already have a bunch of support lines here, so I haven't really put 10 in, but 10 as of now would probably be their next support level to regain before trying to make a push more towards that $12 area. If we can get some positive action in early market tomorrow or Wednesday, depending on how the market conditions are going, we could see a decent green run from the stock or from around this $8 area where it could be running up and reclaiming this $10 position. And if we got there, that would make me feel a little more bullish for the outlook for the next week. And if we drop down here to the $7 portion of the chart, we could be seeing a couple different scenarios. One being where they pull down even more, which I would think would be not too likely as of now, just due to the fact that they appear to have very strong support there, and the fact that all of their cash that they were just issued in their offering, it kind of bolsters their position where they should be at least $5 to $7, even outside of the short squeeze nonsense and everything anyway. On top of that, before we had gone over how the analyst price targets for this were an average of $14. So even with the share offering, I do think they're undervalued, sitting currently under $10 to $12 even right now for the short term. If we can reclaim that $10 area, I'm going to see a good look into next week with their earnings, because I think their earnings are going to be a significant catalyst to keep in mind. I think referencing that money and possibly giving some idea of the direction of the company or maybe some insight into the Google deal would be fantastic for what could happen with the stock and could give investors a little more peace of mind for what's going on with the company as we look towards the future. In the case of MRIN, I still have the same conviction that I had in the stock before. None of this has changed my mind. I think this was a decent direction for the company. They have historically not really cared about the stock price. they own 12% of the float. So just as much as it hurts people and they want to blame them for putting this out and hurting them, this also hurts their own positions. And they also realize that there's a larger long-term upside for the company if they have cash to be able to maneuver their different partnerships and different expansions in the technologies that they're running with their company. Going through to the end of the year, I think we have a couple very significant catalysts between not only this earnings report, but their possible Q3 earnings report that'll come up. And then also just in September, their Google deal needing renewal. So that possibly coming out between now and then of where that's going to be and how much it's going to be valued at potentially. Going into next week, if the earnings do get very positive feedback from investors and people trying to trade this, and this has reclaimed that $10 to $12 area, I could see a possible bounce where this goes between that $15 to $20 range again. And so this is what my short term is going to kind of look like for them. I think even though there's a lot of downside that could possibly play out, I think that cash position also bolsters some of that market cap upwards, which leaves them in a bit more of a better case for their company sitting in a safe spot for people that want to invest long term even. I know a lot of people are asking whether they should cut their position or hold, or if they should buy or whatever. And this is going to be a situation where you just really needed to enter this trade to begin with, knowing what could have happened. I'm going to take credit for possibly in my videos not going over the significant downside that could have played out on it. I did make the mistake of saying that I didn't feel like they could do a share offering and that it was unlikely. So that's my fault on putting that information out. I miscalculated on their last offering where they were priced at compared to the baby shelf offerings, where if you're under $75 million market cap for your shares and everything, you can only do a certain amount within a year period, which would have put them in September. So that's on me for misprojecting that. But for anybody concerned about this company, I don't think there's really any concern to be had for the long-term future. It's really just if you were trying to trade this short term, what you are willing to cut out of your position or however long you're trying to hold to see if this can bounce back from the current area. Whether you are trying to enter MRIN again or any of your other trades and you're not sure how to get your position right, maybe you have just always YOLO'd all your buy power on a certain price when you want to get in because you think it's safe, I suggest you go check out this video I put up yesterday that goes into dollar cost averaging. I even did it with potentially $100 for how you should do entering your positions for people with smaller portfolios. Obviously, you can scale this and the percentages that I use throughout the video to your own scenario, but this gives you a bit more of a plan that you can kind of adapt to yourself going into new positions in the future, and also keeping your average lower so you're not being too red as something possibly doesn't react the way you expect going into the future. I'll also be adding to this throughout the week with different ways of trimming your profits going into catalysts and also some more advanced charting techniques and things like that. That's going to do it for me in this video today, guys, and I'll catch you in the next one. Peace.